Good morning. Welcome to Trading Together. I'm Mel Gacee. Thank you so much for being here this morning. I am a day trader. I am actually trading the SPY every day, and I use 0 days to expiration options. So welcome. It looks like we've got we're going to analyze the market here in just a second. I am actually in a trade that I need to get out of here in just a minute. Give me just a moment. This is in this account. All right. So we're watching the SPY right now, just starting to break the top of this range that we've been fighting with for a while, all morning to be exact. We did have data this morning. We had the JOLTS job report openings, and that came out better than expected. So more job openings are good for the rate cuts and for the economy. So I'm currently just closing this position. That's why I'm a little bit distracted, but we're almost done here. All right, thanks for your patience. Okay, so we have the JOLTS job opening report this morning. We haven't seen that report in 2 months since the government shutdown. So there was a lot of uncertainty in the market about what labor was looking like. That report came out pretty positive. Looks like we have more job openings than we had anticipated. So that's a good thing. And the market liked. You can see right here, this is right after the report. We got this. We hit the overnight high. So when I say overnight high, I'm talking about run all night long, and so does the SPY. So futures are the contracts that people are buying on the S&P 500, S&P 500 being the index, right? So the futures are running all night long, and this is a picture. This chart right here shows what is going on with the futures. Now, as they run all night, they give us an idea of how the market is going to open the next day. So futures ran all night in kind of a tight range. And what happened is we pushed up in kind of just sitting in this range, and we're still in it. And we've been since this little pop and drop, right? We've been sitting right here in this range. So it's hard to take a trade when we are range bound, but I did just take one. I took a call and I was able to make a little bit of money on that call right before the stream started. The call is when we have a wager that the market is going up, and the puts are when we have a wager that the market is. We can make money when the market goes down. So if you're new to trading, that's kind of an interesting concept, that we can actually make money as the market goes down, but we certainly can. So because of these charts here, I took this call. We were able to make some money on that. And I'm going to be watching right now and see what our next trade is looking like. So we came up here. We almost hit this high right here. And we are still kind of in this push up phase. So what we want to do is wait for a reversal here. So this thing can keep going up, but I'm going to give it a minute and see if we can get a little bit of a reversal here. Okay. All right. Let's talk about the markets in general. I'm going to, while we're waiting for this trade to set up, because right now we don't have a perfect trade set up. While we're waiting, some of the charts and get an idea of where we're at. Okay. I, by and large, mostly trade the SPY for a couple of reasons. The SPY is the most liquid, meaning it moves the most, it has the most volatility, Plenty of buyers and sellers in the SPY. All right, we're getting a little push here. And we are pretty close to our top right here. So I'm watching this for a potential, either a potential continuation of this move up or a reversal. But back to why do I trade the SPY? I trade the SPY because it is by far the most liquid of the products out there that you can trade. There's always a buyer on the other end. There's always a seller on the other end. Some people trade, low float stocks or low liquidity stocks or even penny stocks, and you can do fine with those if you're careful. You can lose a lot with those too. But the issue with those is you don't always have somebody on the other side of your trade, so you can get stuck. So you buy in, let's say you buy a call, or even the stock itself, you buy in. There may or may not be somebody when you're ready to get out, when you're ready to sell. So that's what we mean when we talk about liquidity, open interest. You need to have fluid movement in a stock to be able to trade the way I do, which is scalping. Scalping being in and out real quick. So I choose the SPY for number one, for that reason. It's highly liquid and there's always someone on the other side of my trade. Number two, SPY has daily expirations. So I like to trade what's known as 0 DTE. That means that this option is going to expire today. So all options expire worthless. So what that means is if you're the buyer of the option, you could also be the seller, but that's a different subject. If you're the buyer of the option, and by and large will be buyers on this stream, if you're the buyer of the option, you're going to lose all of your value by the time that that option expires. So all options expire worthless. So if I buy a 0 days to expiration, meaning this option expires today, that option is going to be worthless by the end of the day. So I need to make a decision either to get out at a loss or to get out at profit at some point earlier in the day before that thing expires. So that's kind of the idea of why I trade the SPY. It's got 0 days to expiration. There's only 3 or 4 products out there that have every single day expirations. SPY is one. IWM, that's the ETF over the Russell. That's another. The QQQ is the ETF over the NASDAQ. That's another. And so these products are daily. That's what I'm looking for, is daily expirations. So once I see a trade that I like, I'm gonna let's analyze the charts first, and then we'll talk about how to place an order. So looking at the charts, I'm gonna show you what the daily chart is looking like right now. So remember, I'm trading the SPY. That is the ETF over the S&P 500. The S&P 500 is a basket of stocks. That's all it is. It's an index. It holds 500 of the top performing stocks, mega caps, big stocks. It holds 500 of those. The SPY is how you buy the index, right? It's also how you trade. And the ES is the futures over the index. So I chart all 3 of those. I've got the ES on this chart, I've got the SPY on this chart, and I've got the SPX on this chart. They're all going to move almost exactly in lockstep. They're all based on the same product, so they're all going to move the same direction at the same time with very slight variations. So we'll take a look at what the index is doing. Right now we're building this little top here. So you can see we hit this high earlier. This is the SPY. This is the minute chart. We hit this top earlier and we just hit it again almost. And we're building a little bit of resistance here. So I'm not into taking any trade at this moment. We're kind of at a little bit of a high here, so we're going to wait and see if we get a reversal back down. That's what we're looking for. I don't necessarily want to trade another leg up because this feels a little bit extended to me. So I'm not really looking right now for another trade upwards. I'm looking for a reversal, and that could take some time. So while we're waiting on that reversal, let's look at the charts and see if we can make sense of what's going on here. So remember the SPX, the S&P 500, that's the index. We can chart the index. We can't buy the index. So we're going to chart this. And I've got a lot of red lines on here, so that can be a little bit overwhelming, let's say. But let's talk about what these candles look like they're doing. So here we have the S&P 500 on a daily chart. Every single candle here represents one day. All right, and in the meantime, I'm keeping my eye on the SPY here as it pushes this most recent high. Because even while I'm teaching, I'm constantly waiting for a trade setup, and that's what I'm looking for right now. So we're pushing this high and still getting a little resistance here, and that's okay. All right, so on the daily S&P 500, the daily SPX, this is what our chart is looking like. We hit an all-time high. That means we have never been this high before on the S&P 500. That happened at the end of October 10/29. We hit 69.20. That's our all-time high. And then we immediately reversed down for the next couple of weeks until we hit the low at November the 21st. So on November 21st, we hit the low. So we came from the high all the way down to this most recent low, and we did that over a couple of weeks. We then got a reversal, and a pretty strong one. And you see we got 1, 2, 3, 4, 5, 6 green candles in a row. Pretty strong reversal there. Lots of gaps along the way. So a gap is when we see basically air between the open of this candle and the close of this one. We see air in between it. That's a gap. So we've got a few gaps along the way. And we are right now, we've spent a couple of days just consolidating in this range. So basically from about the end of November to today, we're doing just a little bit of consolidation. Now we're getting a little bit of a green candle today. And what we need to do to continue up to beat this all-time high, we need to get up over this most recent high, which happened on Friday. So as we give this a push here, that's what we're watching for. Now, we have a huge catalyst coming up in the market, and that is the rate cuts. I'm sure you've heard about it. The FOMC, the Federal Open Meeting Committee, Market Committee, whatever it stands for, are meeting on Wednesday to discuss the rate cuts. Now, the market has already priced in that we're getting a rate cut, probably 25 basis points. The market's already priced that in. What the market is really looking for at the FOMC meeting, which happens tomorrow at 2 p.m. Eastern, what the market's really looking for is the future projections. So they have what's called the dot plot. That's where the rest of the board weighs in on what they see for rate cuts moving forward. And if the dot plot and if the verbiage and if the press conference is all sounding what they call hawkish, meaning that they dovish, meaning that they want to continue with rate cuts. If everything sounds dovish, then the market is going to respond really positively. And on FOMC days, we see the market really, really respond. Lots of volatility happens on FOMC days. We can go up, we can go down, and it can be huge spikes. So we have to be really cautious on those days. Usually I try not to be sitting in a trade when we're about to have those announcements because it can really go strongly one way or another. So usually I'll wait till after the announcement and kind of gauge the market response before I take a trade. All that being said, that is what the market is waiting for. All of this little consolidation in here is all just the market waiting, kind of holding its breath, if you will. Okay, nice punch up, new high here. And could we take a trade? We could, but we are at the upper edge of the VWAP. That's the second standard deviation of the VWAP. We certainly could go higher, but usually when we get up to this second standard deviation, we can see reversals. All right, I am going to take a chance on a quick call here. I'm not in anything yet. I'm just getting prepared. All right, I'm going to take this call here, punch it, I'm in. And so right now I'm sitting in the 684 calls for today's expiration. And I'm just watching this candle here closely for my exit. Getting a nice little push here. All right, still getting a little climb. And I'm just waiting for this little top to form here. All right. Nice little move. Tiny moves right now. Very tiny. And it looks like it's slowing down a wee bit here. So if we can get this thing to pop one more time, we'll jump out, even at a small win. Just giving us some slow moves right now. So right now our profit is just flat. Here we go, little bitty move here. I'm going to go ahead and jump out here at a 2% win. Punch it, I'm out. I think this thing could climb some more, but I'm not going to bet on it. So we'll take it, little win there, and we're starting to get a turn down. So hopefully you are able to follow and get in and out quickly out of that one. So the next move I'll be watching for is going to be to the downside. Now, could it climb more? Yes, absolutely. But this move has been pretty extended. It's been moving upward since about 10:51 Eastern. So it's a little bit extended. I'm not going to trade this move to the upside again. I'm going to wait for a downward move and consider some puts here. And now as we wait for our next trade, we can go ahead and just discuss the daily while we're waiting here. All right, so back to the daily again. We're in this, even though it's slightly upward, it's still a consolidation zone. And we're currently, like I said, waiting for the FOMC meeting tomorrow, which is the catalyst. That is going to give us the movement that we've been waiting for. Today we're getting, like I said, a wee bit of a push here. It's not huge. We're up about 16 points on decent job openings data. So my expectation is we will probably stay pretty much within this range. We've got a recent high at 68.96, so almost 6,900. And this recent low at roughly 6,800. So basically about a 100-point range where we've kind of been hovering. So my expectation is we'll probably stay there. We'll probably remain range bound today. I doubt, I'd be very surprised if we beat this high today. I think we'll stay, this is what we call an inside bar. So today's bar so far fits inside yesterday's bar. Usually that's just another way of saying consolidation. So that's kind of my expectation for the rest of the day. Now, on a consolidation day, we can sell credit spreads. It's a great tool for when we see consolidation. And I won't go into all the details of it, but we do have a lot of tools at our disposal. By and large, I'm scalping in and out of single leg calls and puts. But when we get some nice sideways movement, some nice sideways chop, that is a great opportunity to sell credit, where we were talking about the time decay of, as the buyer of the option, when you're the seller of the option or the seller of the spread, you capitalize on that time decay, you get it working in your favor. And I won't go into all the details of that right now, but enough to say that we have a lot of tools at our disposal. We don't have like, what's the saying? When you have a hammer, everything's a nail. Not everything's a nail, right? And we don't just have one hammer. We have a lot of tools at our disposal. So single leg options, being buyers is a great way to scalp, and that's my bread and butter. I am profitable almost every day, definitely almost every week. So this is what I do for a living. I don't have any other job outside of trading. This is what I do for a living, and I'm profitable at it. So scalping is my bread and butter, in and out of these trades really quickly. But when we get this kind of chop that we're in right now, sideways movement, there are other tools, and among them, the credit spreads, which we can do on this stream as well. And I can definitely show you how that's done. So let's go ahead and move back over to our minute chart and watch this for some downward movement here. That's what I'm waiting for. And I'm going to go back to my futures chart in this window. Now, could we take puts here? Yes, but I'm not convinced yet. I don't think this move is coming down too far just yet. Maybe it will, but right now I'm not going to send that, take that trade. So I'm going to wait for a little bit more confirmation before I jump into anything moving downward, because here's the thing. For the last couple of hours, the trend has been upward. So what do they say? The trend is your friend, right? I really work on making sure that I'm following the trend. Now, there are times when I take counter trend trades, but those are more risky, and you'll generally, by and large, you're always going to make more money when you follow the trend. So right now, the trend is up. Now, are we getting some downward signals here? Yes, we are. But I need a little bit more confirmation before I would take a counter trend trade here. So let's talk about a couple of the indicators that I have on my charts. I've got the VWAP happening right here. We are kind of moving down here a bit. We're sitting right at the overnight high. So let's see if that gives us a bit of a resistance here. Remember, I said the overnight high is where we got to last night pre-market. Looks like we might be coming down through it. Okay, so back to indicators on my chart. And my charts tend to be a little busy. Could look a bit like a Christmas tree. But this white line right here is the VWAP. That stands for volume weighted average price. All right, getting a little bounce here right at the overnight high. We could consider calls here. If we bounce and reverse back up, we could consider taking more calls. But once again, VWAP meaning volume weighted average price. And so it's very similar to a moving average. I'm going to load some calls up here. I'm going to look at the, actually, let me do it over here. I'm looking at the December 9th, 685 calls. Those are pretty inexpensive right now, only 76 cents. I'll take quite a few of them. I'm not in yet. I'm just holding that option order, waiting to see if this chart moves in the upward direction. So volume weighted average price is very similar to a moving average. It is averaging the price like all of these other moving averages I have on the charts. It's averaging the price. But what volume weighted does, VWAP, volume weighted average price, is it takes the volume and it gives extra weight to those prices that have higher volume. That is helpful for us. And so this line is constantly running through my charts, and this is the dividing line for me. This is my highway signpost. This tells me, are we bullish? Are we bearish? And a really simple rule for beginning traders is it's a good idea to stick with calls above the VWAP and puts below. Now that's not a hard and fast rule, and certainly you have to be careful because we do reverse. So if this, for example, is a reversal, you certainly don't want to be stuck in a call if we're reversing down, even though our price is over the VWAP. So you have to use the common sense of what is the chart looking like right now. But a general rule of thumb is it's a good idea to stick with calls above the VWAP, stick with puts below. So that's one indicator, probably the main one. I use it a lot that I keep on my chart. I'm always watching. And the VWAP has two other components to it. It has the upper band and the lower band. The upper band being 2 standard deviations above the VWAP and the lower band being 2 standard deviations below. When we get to these deviations, sometimes we can see reversals. So they're a bit of those are kind of our boundaries, right? So we're looking for potential reversals as we move up into these areas. So right now we had this little fake little mini drop. It didn't really go anywhere, and now looks like we might be starting to push back up. Could we take a call here? I think we could. I do have them loaded. And I'm cautious here because we're at the upper edge of the VWAP. So that's our little caution signal here. All right, we're coming right up to this recent top and we're beating it. I might go ahead and try the quick call here. I am in, punch it, and I'm going to be watching that. All All right, getting a little move back down here. So we're watching for a little push right up here. And we don't need, that's the beauty of trading 0 DTE. We don't need a huge move to make a profit. So we are getting a little response here from this outer edge of the VWAP like I was talking about. But we're also right at this top here. So let's see if we can push up through that again. And sometimes you got to just wait through these. Got to be patient. That's the name of the game in trading, for sure. By the way, in other news, Bitmine and MSTR up nicely today. Those are two equities that I follow and I like. Bitcoin up to 94 after a pretty brutal plunge to the 80s. So nice to see Bitcoin recovering there. So we're just kind of slowly making this upward trajectory, zigging and zagging. If this thing drops below this recent low, I'm going to go ahead and stop out. We could have also made a double top here, so I'm watching, I'm aware of that. So again, if we beat this most recent low, that's where I'll stop out. And for me, I have a stop out rule of 50%, which sounds big to a lot of people, but I have a 90% win rate. So I can afford to let my stops go just a little bit bigger. All right, coming back down here. All right, testing this low right here. I'll be watching for a close of the candle. So we got the close below with a green candle response. Let's watch and see if we pull back up. Okay, opening red on the next candle. All right, little green response here. And coming back down red. Okay, so I'm still giving this a little room because we've got this little green response here. And little response off the 100. There we go. There's a nice response. Had to give that one a little bit of room, I guess. Let's see if we can continue back up here and reclaim. Nice green response here. Coming right back down. And the other thing I like to look at while I'm trading is what kind of the leadership is doing. And I call the leadership the Magnificent Seven, or the major seven largest tech stocks: Apple, Amazon, Microsoft, Meta, Nvidia, Google, Tesla. Those are all part of what they call the Magnificent Seven. They make up a big, big chunk of the S&P 500. So usually while I'm trading, I've got my watch list going on over here, and I'm keeping an eye on what I call it the leaderboard, what the leaderboard is doing. So we're looking at Tesla up almost 2%, Amazon up 0.4%. We've got the NASDAQ just sitting at its flat line. So we're a little bit above the NASDAQ in terms of the SPY is up 0.16 and the NASDAQ is behind us. So sometimes the NASDAQ leads and we follow, and sometimes we lead and the NASDAQ follows. So we'll have to see what happens here. But it looks like a nice little recovery here. Very nice recovery there. Let's see if we can climb back up to these highs here. Nice little climb. All right. So I had my stop set right here, and it came right down below it, and then I could see it was kind of trying to hold it. So I gave it a little room since we had not hit the 50% stop out. That's my line in the sand. So since we had not hit that, I went ahead and gave it a little bit of space. So right now it's trying to recover, but what remains to be seen is, can we get up to these highs again? So that's what we'll be watching for. And that's my little puppy in the background. There we go. Resuming the climb. Very nice. Very, very nice. Almost touching these highs. Let's see if we can push it a little higher. All right. Little stall here at the top of this candle, but that was a nice push. See if we continue this run upward. we go. And you can see we've got the MACD rolling over right here, so that's nice. It's a little bit of a added confirmation for this move. Let's see if we can keep it going. There we go. And what we want to see is a break of this top right in through here. So that's what we're looking for. Getting a little volume on this push. That's what we like to see. These little blue bars down here are representative of the volume. All right, little response, little reversal. All right. Almost up to the top here. Just need a few more candle pushes. All right, very nice. It's giving us a wee bit of a resistance right here, but I think we can push through. There's our push. All right, still trying to push this top. It's taking its time. Give me 1 minute. My little puppers needs to go out. All right, little reaction right here at this top. And that's the third time we've come up here. So we really need this top to break to the upside. We don't want to form a triple top here and start coming down. 1, 2, 3. Let's see if we can get this thing to keep going. Okay, a little bit of response here. Okay. Not looking like it's trying to drop hard just yet. So let's just see if this is a tiny response. All right, bit of a drop here. Just testing the 20 period moving average right here, which is this yellow line. And pushing through. All right, let's see if we get a little response here at the 50. That's this blue line. Nice little move. All right, days like these are a trial of patience, right? We've got to wait. Because by and large, even though we've kind of been traveling up, it still really is a range. When you kind of zoom out and look at it, we are still really in a range. All right, little move down here through the 50. Last time we came down here and bounced at the 100. All right, little bounce. We haven't gone too far down, so it doesn't look like selling to me. It just looks like ranging behavior, so we're going to have to hold it. All right, little tiny bounce here. And we've got our VIX sideways. All right, pushing back up through this moving average. There's a little bump. That's what we needed. So you can see this behavior isn't really buying or selling. It's range bound. Now, sometimes there can be buying and selling going on underneath that we don't see, and we would call it distribution, and we see that happening in these consolidating ranges that are moving sideways. You don't know if we're accumulating or distributing until you get to the other end of the range. But looks to me like it could be accumulation, meaning buying. I'm just not seeing much selling pressure yet. That doesn't mean it won't come. I just don't see it right now. All right, we are almost back up to this recent top. Let's see if we can push it this time. And again, these sideways movements are the most challenging to trade. Truly requires patience. Here we go. All right, almost reaching this most recent high. Let's see if we can break through it this time. We're getting a little bit of increased volume here. You can see that blue line right there, giving us a little volume punch. There we go. That's nice. We need to get up over this high right here. And it sure has been slow moving today. These are the days when you just gotta be patient. Sit on your hands and wait for this move. You can see the upper boundary of the VWAP, the upper edge, the second standard deviation. You can see that it has continually moved upward. That's kind of a normal thing when we've got the market slowly moving upwards. So we've got a little bit more room until we come and hit this top again. And another little response right here at the top. So still holding this area, 685.3. It's kind of seems to be the area they're trying to hold right this moment. And a response, back down. And not going too far. So we're still making, as you can see, what we would call a bit of a rising bottom. So we're making these higher lows. And again, this is the minute chart, so it's noisy, it's busy, it changes rapidly, but the patterns still fall into play. So right now we've got the low, recent low, higher low as of right now. Let's see if we hold that here. It's also given us another bounce off the 50, which is this blue line right here. So far holding that higher low right there, right in there, so far. And coming back to the 50. Getting another little bounce. And sometimes it's good to take a look at a little bit of a higher time frame. So down here is the 5 minute. Now this is a Heikin-Ashi chart, so it looks a little bit different, but by and large you can see it's really just sideways, the same as what we've been saying. We've been in this sideways range for quite some time. So this is the higher time frame, the 5 minute confirming it, also the 15 minute. On the 15 minute, we look a little bit more bullish. The 15 minute looks like we're pushing up, but which we are. But the 5 minute definitely giving us this range bound behavior pretty clear. All right, another response down. Break in the 50 right now. All right, reaching the overnight high. Let's see if we get a response here. It's been kind of protective of the overnight high so far. We pierced it here, came down through it, looked below and failed, came back up, little pierce right here. So it's been kind of holding this level fairly well. Let's see if it holds it this time. All right, little bounce off of it. I'm going to go ahead and average this trade, which means I'm going to buy a few more contracts at a lower price. And then let's see if this will continue to move up or if we're going to come back down. Still basically testing the overnight high right here. Still basically in a test. A little break of the overnight high here. Coming down to the 100. Getting a tiny bounce. Let's see if we can hold it. This is where we held before, right here at the 100. So let's see if we can bounce from here again. Still testing. Tiny candles right now. Not a lot of conviction yet. Little break of the 100 here. So just kind of holding here, not too far from this recent low. So here's our low. And breaking the low. Excuse me. Excuse me. Right, still right here at the low. See if it wants to bounce a bit. There's a little bounce. Little, after this little decline here. Very small little stair steps down, very tiny little movements here, but pretty consistent move down. Just stair stepping it right down to the VWAP here. And here we are at the test. A little bounce. And we're a little bit overbought here, excuse me, oversold. RSI looking a little oversold here. Let's see if we can move it from here. So we're moving back up from oversold and bouncing off of the VWAP here. Let's see if we can get an upward momentum going. All right, little move here. Looking like it wants to make a little upward momentum. Let's see if that can follow through. Get a little volume picking up here. Our trade's looking a little better. Coming back up to test this overnight high from the underside. And coming back down. Sitting about 10 points over yesterday's close. So a little bit green today, not a lot of strength either way, really. Not a lot of strength either way. So we came up and try to pierce this 20 from the underside. Let's see if we can make another stab at it here and continue this upward movement. Let's give it a little try. This 684.4 area on the SPY has been important. It's been a bit of a floor. All right, little upward movement here. Let's see if we gotta take another shot at this overnight high. All right, nice little push. All right, come on, let's make another shot at it. And these slow moving days truly are the hardest to trade. Takes a lot of time and patience for sometimes a very small win. Hello, it's Poetic Bra. Nice to see you. Welcome. Thank you for joining the stream. Usually I'm done with the stream by now, but I'm in a trade. I'm in a call right now. It's down just a bit, and I'm waiting for a retest of this overnight high. All right. It's Les, Willow, and Anya. Hey! Oh my God. Oh my God. What? Wow. Okay. I love that so much. Hello, you guys. I've missed you and I've been keeping up with you, watching your beautiful baby. So, congrats to both of you. Yeah, I love that you want to learn. That is what we're here for. So, very, very cool. So since I'm stuck in this trade, waiting for it to go one direction or another, I can talk a little bit about what I'm doing here. And thank you. We miss and love you. Oh, you guys are the best. That's awesome. Love that you're here. Love, love, love. So yeah, basically, I don't know where you're at in your trading journey, but starting from the very basics, I'm trading single leg options, meaning I'm going in one direction. And when we are looking at the stock market moving up, we buy calls. When we're looking at it moving down, we buy puts. And something I said at the top of the stream is that's the beauty of trading the stock market. You can make money both directions. Some people think you can only make money when the stock market goes up. Not true. You can make money when it goes down as well. And we do that trading options. So it's not the actual stock itself. It's based, the option has a price that's based on the stock itself. So it's derived. The option price is derived from the stock. We call that derivatives. So the options are derivatives of the stock price, and that's what we're trading. And so when the what I'm trading is called the SPY. That's the ETF over the S&P 500. So the S&P 500 is this big index of 500 stocks, and the SPY is the way we trade that. So I'm trading options on the SPY, and like I said, calls are for when I want it to go up, and puts are when we want it to go down. So right now I'm in a call, and it's going against me because, as you can see on the chart, we are moving down. So that's, I'm just being patient here because it's been kind of up and down a little bit. So I'm going to give this some room. We're back to the VWAP. This is the indicator, one of my favorite indicators that tells me what direction we're going in. So this VWAP is this white line right here. So if I zoom out, you'll be able to see it better. White line right here. That tells us more or less what direction we're going in. And right now it's trending a bit upward, even though we've been having this kind of round over here. You can see the pricing has come down. Lots of times price will come down to the VWAP and we'll get a reaction from it. So we're getting a little reaction right now on the VWAP. So we saw the price come all the way down, touch the VWAP, get a little bounce, came back down, touch the VWAP. Now let's see if we're going to bounce or if we're going to break. If we break down through the VWAP, that would be kind of a bearish signal, a negative signal. So that would signal that maybe we would start looking at puts. So that is where I'm at on this trade, just waiting for it. Now, if we break down through the VWAP, we could go ahead and pivot and move to the downside, buy a put. But I'm going to give this a minute and see if we're actually breaking it. So this, again, this white line here is the VWAP. This candle right here is the price, and it's testing right now, breaking through it, and every candle on this chart is a minute. This is a minute chart. So we are breaking through it. And we'll watch and see what happens from here. If you have questions, jump on there, you guys. Go ahead and throw them at me. I'm happy to answer any questions that I can answer. And nothing is too newbie. So that's what this stream is for. This is to help new traders and teach people and trade together. So don't be afraid of newbie questions. I love them. And that's what we're here for. All right. Little bitty bounce here, not much happening. So right now, breaking down through the VWAP, we are really close to our flat line, meaning where we opened today compared to where we closed yesterday. Right now, we're up about 5 points over where we closed yesterday. And that's how, you know, when the market shows the red and the green, it's basing it on where we were from the prior day close. So right now we're up, like I said, 4 points over the prior day close. And let's see if we can get a little move upward here. It's definitely been trying to pull down for the last while. All right, so are you waiting for the option to bounce up to a point that you'd profit off the sale? Absolutely. Yes, I am. Great question. Thank you for asking that. So let's see. Pokemon trainer. Willow. Love it. All right. Yes. So let me show you the options chain and maybe it'll make more sense. So if we were to buy the call right now, we would come over here. I'm on Thinkorswim. That's Willow. I love it. I love it. I had a feeling because it said Pokemon Trainer Willow. um, so let's say that we were going to go ahead and buy an option for the call option. Let's say we think from here, from this point, that we might be pushing upward. Now we're under the VWAP, so we might not buy the call, but let's just say we would come over here to our trade screen. I'm on Thinkorswim. That is the Charles Schwab product, and it's a great application for trading. I love the charting. This is where we would actually buy and sell and place the order. So calls are on the left, puts are on the right. If I were to buy a call right now, I'd come over here, I'd click on the option that I wanted. Usually I'm going to pick the option that's what we call closest to the money. That means that the option that's closest to where the SPY is trading right now. So SPY is trading at 684. The closest call option is going to be these 683s or these 684s, but the closest one that's in the money, that's the shaded area, is going to be this 683. So if I were to take that trade, I'd click on it and I'd go ahead and buy a few, and then I would hit the confirm button and the send button, and we would be in that trade. So that's kind of how we do it. Then we have a monitor tab that shows us what we're winning or losing, and we wait for it to go in our direction, or if it goes against us, then we have to take the stop out, meaning that not every trade wins, and some of them lose, and sometimes we have to take the loss. And that kind of stinks, but that's all part of trading. All right. So yes, we're waiting on this call for the price to move up. If it continues to move down, then we'll have to take a stop out and take our loss and maybe pivot to puts potentially. And it's been a very slow go this morning. Not a lot of movement, even though you can see on the chart looks like it's moving. It is, but these are tiny moves. We haven't gone too far. So if we analyze this price movement today, we had this open with this push up. We went sideways, pushed up again, went sideways, and then pushed down a little bit. So we're back into this original range right here. All right, how long do you typically wait the movement of the trade? Like when do you decide to just call it and cut your loss? Great question, Willow, great question. Usually I am going to not let it get any lower than 50% loss. And if it gets lower than a 50% loss, then, or at 50, that's usually when I cut it and call it. Sometimes I'll get out sooner if it makes, if it looks like it makes sense to get out sooner. Sometimes I will, but 50 is usually my line in the sand. All right, we are coming down to our flat line. We're up about 2.5 points from the close of yesterday. So if we go negative here, then we could see a bigger drop. All right, little bitty response here, a little bitty green candle. Let's see if we can make this go up. All right, do you live stream every morning? Willow and I would like to learn. Yes, I do. I start every morning at 9 a.m. Mountain, And usually I'm only on for an hour, but since this trade is going long, I've decided to extend it in case anybody is in that trade and following. But usually it's from 9 to 10 Mountain. And yeah, I'm here every morning. So jump on. I'll teach as best I can, and we'll get on that train. I love that you guys are wanting to learn. I think that's amazing. And this is meant to be interactive, so you are definitely welcome to drop any questions or comments that you have. Drop them in there and we'll attack them. And we don't have a lot of people streaming right now, so I've got all kinds of time and energy to dedicate to answering any questions. So go ahead and drop those. All right, little bitty bounce here. Now, do you guys have a brokerage account, or do you need to open one to get started? All right. Usually work at 5 a.m. Ooh, 5 a.m. But be tuned in during the weekend morning. Willow will try to be on every morning. Awesome. I love that. Wow, that's early. I'm sorry to hear that. That's tough. That means you're getting up in the middle of the night. That is tough. But yeah, absolutely. Jump on at any point. Okay, so you've got one with Schwab. Fantastic. Um, and if you're with Schwab, Thinkorswim is kind of well, they bought it from TD Ameritrade. But if you have a Schwab account, you can just go onto your Schwab account and download your Thinkorswim if you don't have it downloaded already. And that's what basically all these charts are built on. All right, so we have not gone negative yet. We're still kind of floating at this opening range, kind of where, like I said, where we closed yesterday. So we haven't gone negative yet, but it looks like we're trying to. It's definitely dropping here. And it's been a bit of a slow grind down. It hasn't really gone super fast. Steady, but not so fast. All right, almost to our flat line here. Just sitting here about 2 points over the flat line right now. Yeah, great question. I am doing this with the SPY, but this is something you can do with any optionable stock. So you can also do it with stocks. It's just a little bit more expensive depending on what you buy, and it's not quite it. You don't make as much as fast. You can just buy the stock and sell the stock, but most of the stocks that you're going to be familiar with are going to be optionable. So, you can buy options on Tesla and Amazon and Apple and Meta, all of those. And I can show you that. So let's say we wanted to look at some options on Apple. We would type in the ticker up here, AAPL. We could go look at the options chain for Apple. Now, the difference between Apple and the SPY is that the SPY has options that expire every single day. Apple and most of the other stocks have options that expire weekly. So you can see this is the list of the expirations for Apple. So the first expiration will be this Friday, the 12th, then goes the 19th, the 26th, the 2nd of January. So these are all weekly expirations. And if you wanted to, let's say, buy a call on Apple, you would decide what expiration you wanted. And this is what the prices are. Now, these prices reflect the price of one. So options are written in contracts, and every contract controls 100 shares of stock. And so you have to take this premium, this price right here, right? If we were going to get this call, it says $2.69. But since it controls 100 shares of stock, we got to multiply that by 100. So the true price is going to be 269 or 270 in this case because it's moving. But still pretty, not too expensive to trade options. And so that's another thing that's nice about trading options is sometimes it's a little bit cheaper than actually trying to buy the stock itself. In this case, Apple is trading at 277, so there's not too much difference. But sometimes the stock is way more expensive and the option is a little bit cheaper. For example, on the SPY. So the SPY is trading at $683, whereas the option to buy a call right at the money is only $125. So a lot of times that's another factor. It's a little bit cheaper to trade the option than the stock. But the difference is stocks don't expire, right? Options do expire. So options are going to expire worthless. At the end of their expiration, they're not going to be worth anything. So that's something to bear in mind when you trade options. It is riskier. If you're just buying straight stock, and it goes against you, well, if you want, you can sit on it and you can just wait for it to come back. But with an option, it's going to continue to decay because of the fact that it expires, and when it expires worthless. So that's the risk in trading options. But there's also the benefit of you do get the leverage. It moves in your favor much more quickly. All right. Well, I am going to go ahead and come up to the end of this stream, but I've got just a couple more minutes. If you guys have any other questions, you can drop them. Otherwise, we'll be back again tomorrow at 9 a.m. Mountain. So drop your question now. I'll hang out for a couple more minutes, and then we'll go ahead and end this stream. I'm so excited that you guys are here with me this morning. I love it. It's good to see you even virtually. Like I said, I do follow you on social media, and I've been watching Anya. She's just a doll. She's so cute. So cute. All right. And we are now right at our flat line. All right. So I answered most of what you were looking for. Good. I'm glad I could help. And Anya's beautiful, just like her dad. Yes, she is beautiful. All right. Thank you, guys. It's been so great to be here with you this morning. We did take a little winning trade this morning, and still waiting for this trade to play out. But it's been really great being with you guys this morning, and we'll be back tomorrow at 9 a.m. Mountain. All right. Bye for now, you guys.